The situation has truly become chaotic. New and unbelievable developments have occurred. Silver experienced the Friday smackdown, something we have not seen for quite some time. And it could have been much worse. I will explain the movements of silver and why we should still be very content with what it is doing. Please listen to me carefully, because what looks like a disaster on the surface may actually be part of a completely different story. It was a bad day for silver, but it was not as bad as it could have been, and I think this will be much like what we saw during the previous price smash. Typically, it recovers very soon after. I think the same thing will happen in this case too. This type of surge after a decline is a pattern we are accustomed to. If there is a turnaround or a continued move in a downward direction, we can spot it very well. Now, let's talk a little about what a mainstream media source says happened in the silver market today. Then we will get into what some of you are saying about the day's events. Reuters reports that silver prices fell nearly 3% on Friday after hitting an all-time high earlier in the session, as profit-taking set in, while gold rose to a 7-week peak. That's it, profit-taking. People selling off at the high. It makes sense on the surface, and you know what? I'd like to believe that's what happened. I think it's a combination of both things. I'm not trying to sit on the fence here, but I do want to keep an open mind to what's going on in the markets, especially with the margin call increases that I reported on in this morning's video. They report here that the dollar held steady after falling in recent sessions. A firmer dollar makes greenback-priced metals less affordable for foreign buyers. As I look at the market right now, the dollar is up, but only slightly. It is at $98.36. The increase we are seeing in the dollar index is $0.03%. It's practically nothing. According to Bart Melek, global head of commodity strategy at TD Securities, there is some blowing off steam with a slight uptick in the US dollar and an element of profit-taking putting pressure on prices. But here's the truly interesting part. Silver prices are up nearly 5% for the week. And, spurred by tightening inventories, sustained industrial demand, and its inclusion in the U.S. critical minerals list, it has gained 112% this year. Think about that for a minute. 112% in 1 year. That is the strongest annual performance in the last 45 years. And some people view a 3% correction as a disaster. CMZ said in a note that the price increase has become excessive, which calls for caution. In the longer term, the fundamental outlook for silver remains positive due to forecast increases in industrial demand. And I absolutely agree with that analysis. The U.S. Federal Reserve this week announced its third and final quarter-point rate cut for this year, but signaled caution on further rate cuts until more data emerges. Investors are pricing in 2 rate cuts next year and are awaiting next week's U.S. non-farm payrolls report. Non-yielding gold tends to do well in a low-interest rate environment. Melek's average forecast for gold is $4,213 per ounce. That is the average, not the high. So, some analysts are seeing figures far above that. Elsewhere, sources indicate that Washington is preparing to intercept more ships carrying Venezuelan oil after seizing a tanker this week, as the U.S. increases pressure on President Nicolas Maduro. This is geopolitical uncertainty happening here and certainly around the world, and this type of uncertainty has historically supported precious metals. Now, I've looked at other research, and based on the reported margin increases of 10%, it might seem like the Comex is showing its hand. However, in the short term, this could actually be bad, as the increased margin calls make it harder for the long positions to buy. So, this is good for the shorts, bad for the longs. What we are seeing is a short-term situation that could have a long-term good reaction for silver, because some of you posted about that in the comments in that video, and it could very well be that this is bad for the shorts in the short term. Historically, Comex margin increases have often marked price floors, not peaks. In the 1980 Hunt Brothers crisis, at the 2011 silver peak, margin increases came every time. And every time, those increases did not signal the end of the rally, but the beginning of a new phase. Why? Because while margin increases kick speculators out of the market, they do not affect industrial buyers and those holding physical demand. They are not playing futures. They are buying real metal. And when real demand does not decrease, prices eventually bounce back. Let's look at the market report. What were the prices doing just moments before the markets closed? Gold is up 0.47%, rising $19.90 per ounce. to $4,310. It reached a session high today of $4,354.30. Platinum is also surging in price, up 3%. Platinum is currently up $51 to $1,755. But silver fell. It dropped over 3% in the early trading session, hitting a session low of $60.75. Earlier in the day, much earlier, it had spiked to $64.69. That was just 31 cents shy of $65 silver. It is amazing that silver was able to get that high, because remember, just a few months ago, silver was at $30. Now it's climbing towards $65. But since then, it has recovered a fairly good portion of its losses. At least a recovery of over half a percentage point, now trading above $62. It was down $2.51 per cent at the time, down $1.60 to $62.30. However, the bid price is still below 62. This recovery is important because if it were a genuine collapse, the price would continue to fall. Instead, it bounced back within minutes. This is a sign of coordinated selling, not panic. And this leaves us with the gold-silver ratio still below 70. That's good news, but it was much lower than that earlier. It is currently 69.46. So silver took a hit here. It got crushed today. But still, there is always the next trading session, and we will find out on Sunday night. Historically, when the gold-silver ratio drops below 60, silver usually outperforms gold significantly. In 1980, the ratio dropped to 16. In 2011, it dropped to 32. It is currently 69, so there is still a way to go. And here is the critical point. If the ratio continues to fall, it means silver will rise much faster than gold. If gold goes to $4,500 and the ratio drops to 50, silver would be at $90. If the ratio is 40, silver would be at $112.50. So, what is the good news? What is the other thing you need to know? A big thing happened. It was even more apparent earlier in the day, but when these numbers were last updated, we are talking about market cap, the ranking of commodity assets by market cap. And this is always an interesting chart. We can see that gold is by far the top asset class, with a market cap of $30.1 trillion and has been for quite some time. It is amazing, especially with the price now hovering right near record highs. Number 2 right behind that is Nvidia. No surprise there. A major chip company, mainly with AI and computers. A massively growing company with a market cap of $4.2 trillion. Not far behind them is Apple, with $4.1 trillion. Number 4 is Alphabet, Google. The owner of this platform you are currently watching this video on, $3.7 trillion. And then there's Microsoft, which was number 6, but is now number 5. Believe it or not, it fell today to $3.5 trillion. But not far behind that is silver. Silver is now number 6. Before, I think it was number 8, but due to its price increase, it is now number 6 in market cap, with a market cap of $3.49 trillion. And at that point in time, it was down $3.9 per cent. So, all things considered, I think silver's price lost almost 4% when it bottomed out at $60.75. However, this is nearly double the current Bitcoin market cap, because Bitcoin has fallen so much over the last couple of months. It's currently at $90,231, but at $1.8 trillion. But earlier in the day, it was practically double Bitcoin. That tells you something. People are moving more towards silver. That is quite amazing. A year ago, no one would have predicted silver would surpass Bitcoin. No one would have thought silver would come close to Microsoft. But here we are. And this is not just price. This is a fundamental shift in global capital flows. Institutional money is tired of crypto volatility. It distrusts the valuations of tech stocks. And it is flowing into a physical, tangible, industrially critical asset, silver. So when we look at the charts and see what happened with silver today, it is quite astonishing. The trading volume around 11 a.m. and 10 a.m. started to really smack down the price of silver. It sawed all the way down from that high. This volume was massive. And it begs the question, is this an example of high-frequency trading, HFT, with timed selling points coming in such a short amount of time once the price reaches a certain point, which seems to be around $64.50? I think, to some extent, yes. These are timed trades that can be programmed to sell when a certain price is hit, and I think that is what happened. But on top of that, you might see larger institutions, the big bullion banks, pile onto this and push and tamp it down even further. I would not be surprised if that is what is happening. Now, I might be one of the only ones with that theory in mind. No one truly knows, and I think only when we can actually prove it in a court of law will we see some sort of example of accountability if there is price suppression by the big bullion banks. But the signs are everywhere. Sudden huge volume at $64.50. Gold is rising, platinum is rising, but only silver is crashing. And on the very day the Comex announced margin increases. A coincidence? Perhaps, but a very convenient coincidence. Now, some people see what the Comex did, raising the margin calls, as a suppressive force, and it could very well be to inhibit the long positions. However, the situation here with this massive move in volume has since tapered off, and much like what we saw on the Sunday night broadcast, the price started to move right back up again. And we are currently seeing a ceiling around $62. It is bouncing around. It hits 62, then it comes back down. Volume decreases even more. It goes up and then falls back down and goes up. So it seems to be hovering around this resistance of $62 at this point in time. But what happened around 10 this morning was quite wild to see. And many people think that that is an example and positive proof of the suppression. But where are those trades coming from? Where can we see that data? I do not think we can. I think much of it is private. Who is buying, who is selling, and what is going on there? Either way you look at it, it is fascinating. We are seeing a recovery now as the markets are getting ready to close for the week. And at least right now, by the time you see this video, we are above 62. It might have fallen a little more than that over the weekend, but right around the high 61 range to the low 62 is a pretty good end of the week, I would say. And it will be very interesting to see what happens when Sunday night comes around. Because here's the reality. Silver has gained 112% in 1 year. A 3% drop in 1 day does not erase those gains. Look at the big picture. In January, silver was at $30. Now it is $62. That is more than double. And the fundamental story has not changed. The supply deficit is still there. Industrial demand is still soaring. Refineries are still struggling. Central banks are still printing money. What happened today is not a correction. It is a shakeout. A shakeout designed to toss out the weak hands. And it worked. People who panicked sold. Traders who faced margin calls were liquidated. But the physical buyers, they are still here. Industrial users still want the metal. Solar panel manufacturers are still producing. Electric vehicle factories are still operating. When you look at history, these kinds of sudden drops are rarely the end of the trend. They are usually the beginning of the next leg up. In March 2024, silver dropped from $28 to $24, a 14% collapse. Everyone said, it's over. 3 months later, it was at $35. In June 2024, silver dropped from $32 to $28, a 12% drop. Everyone said it peaked. 6 months later, it was at $64. And now, in December 2024, silver dropped from $65 to $60, an 8% drop. And what is everyone saying? It's over. Do you see history repeating itself? The difference is that after every correction, silver climbs higher. Because the underlying pressure is increasing, not decreasing. Every drop makes the next rise stronger. When the Asian markets open on Sunday night, one of two things will happen. Either silver will hold $60 and slowly start to climb, or it will see another test. If it holds $60, it confirms that it is a strong floor. And the next move will probably be towards $65. If it drops below $60, $58.50 is the next support level. But the long-term outlook has not changed. Silver is going to $70, maybe $80, maybe $100. Because the basic math has not changed. The 1.2 billion ounce deficit is still there. Solar panels still consume 200 million ounces. Electric vehicles still consume 100 million ounces. AI data centers are still consuming silver. And the supply is not increasing. Refineries are under margin pressure. Miners are at maximum capacity. New capacity takes years to come online. What should we think about the market movements in silver today? Here is my view. If you hold physical silver, do nothing. The noise in the spot price does not affect the physical value. The metal you hold is still the same metal. It still has the same industrial value. it still has the same monetary value. If you are playing futures or ETFs, be cautious. Volatility has increased. Margin requirements have increased. Risk management is critical. If you're considering opening new positions, wait. Wait until silver finds a floor. Will $60 hold? Will $58 hold? Let's see. But do not panic and exit entirely, because the silver story is not over. It is just beginning. Today's drop is not the end of the silver bull market. It is a pause in the rally, a shakeout designed to clean out the weak hands. And historically, these shakeouts create the best buying opportunities. In 1980, a 10-year bear market followed the Hunt Brothers crash, because the underlying story was artificial manipulation. In 2011, a 3-year decline followed the silver peak, because the underlying story was monetary speculation. But in 2025, the underlying story is structural supply deficit, industrial demand explosion, physical scarcity. These things do not disappear in a day. I hope you found this video informative and insightful. Thank you very much to each and every one of you for taking the time to watch. Let me know your thoughts on today's market movements with silver. I would appreciate it if you would rate, share, comment, and subscribe, because the coming weeks will be critical. Will silver find a floor, or will it see more tests? We will find out on Sunday night, and I will be here to guide you every step of the way.